Good afternoon and happy Thursday, everyone. It is Scott Wolders with River Place Capital. It is Thursday, June the 22nd. I want to take just a brief minute to discuss what markets did last week as we had another positive week in equity markets with the S&P 500 being up 2.58% on the week, leaving all of the indices higher, with the mid-cap index being up 1.48% and the small caps as measured by the S&P 600 was only up 30 basis points, but we still continue to see the trend last week towards the end of the week of large cap growth being the leadership. But I wanted to talk about a couple of things that have really recently happened in the equity markets and talk about what's going on with that and if we in fact have actually entered into a new bull market. So we are now officially over 20% off of the lows that were made back in the equity, or the low made back in the equity market in October in the S&P 500, and we are now over 20% higher than that, signaling a new bull market in the equity markets. And so we went into this year with the most forecast recession. If you listen to pundits and experts on Wall Street, economic experts, they all were telling you that first quarter, second quarter, negative quarters, we're going to see negative GDP growth, and we are going to enter into that recession. And so everyone was very negative, but I wanted to give just a couple of very positive catalysts of things that are going on in the equity markets that are in the economy that can allow for markets to continue to move higher. Now, markets are paused this week, and which is fine. We have been led higher by just those 10 names that we've been talking about over the last couple of weeks, or we're providing 95% of the returns in the S&P 500. However, month to date in the S&P, the industrial index sector is up 8%. The material sector is up 7%, while technology is lagging fairly significantly behind that this month. It's pretty flat month to date from a sector standpoint. So you're starting to see that broadening out of the market, which is healthy signs. Money flows continue to remain very strong into equities at this moment, holding very strong technical analysis that we use here at River Place. The other thing to think about is we are at full employment here in this country. We have more job openings than we have people looking for work still. Wages are holding steady. The consumer in the business has more capital and more savings than they've ever had before coming into this, if we do in fact head into a slowdown. Credit is not deteriorating in a rate that we have seen in years past as we've head into a slowdown as the Fed has raised rates to combat inflation. The other thing to think about is we have several things coming down the pike latter half of this year that are very much boosts for the economy. We have the infrastructure bill. We have the CHIPS Act and the Inflation Reduction Act, which is all pouring money into the United States economy. Onshoring is another thing that is happening, and we're building more and more here in the U.S. So you may see a productivity boom in the 20s in manufacturing and things in those sectors, making a real resurgence and comeback to the United States. And just like any bull market or any market, it's never going to be a straight line up. Remember, we're going to have fits and starts and pullbacks, and you have an 8% move in industrials in a month, expect there to be a little profit taking there, a little pullback. And so markets have gotten just a little bit ahead of themselves, as this week we have Fed Chair Jay Powell speaking in front of Congress. He has said that he believes that there's more work to be done and that inflation's not coming down at a pace that they'd like to see. However, we really believe it is. Headline inflation for the month of May was 4%, down from 4.9%, and continuing the rapid descent of inflation over the last 12 months since the peak in June of last year. The other thing to consider with inflation is we will lose in next month's CPI report the June numbers from last year, which was up 1.4% month over month. That number will fall off of the index this next report that the Fed gets. If inflation holds the same and all data was exactly the same, headline inflation would be below 4%. It would be 3.75%. So continuing to fall down. So what we believe is that the Fed is talking tough here, But if inflation continues to fall on its own, we believe that we may have seen the last Fed rate hike, which gives us the opportunity now for investors to have some clarity to move forward and get back into the equity markets. The last thing that I'll mention is we did have an IPO last week of a non-profitable Mediterranean restaurant that opened up 100% over its list price, showing that there's a lot of dry powder on the sidelines ready to enter in. So as always, if you have questions about what's going on in the equity markets, if this really is a bull market or not, call us. We'd love to talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.